Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Scott, that was a pretty darn exciting interview I listened to. So I'm really looking forward to having Tim Holladay, Spacestation Ventures. And yeah, he's great.
Yeah, and honestly, it's probably it's a great backstory. I'll tell you, it was interesting. Tim and his brother pitched at my VC Fast Pitch event. I think it might have been 2009 with his previous company, CrowdMics. And him and his brother pitched for 1 minute. And during lunch, he had an investor from Menlo Park reach out to him, had lunch together. They had dinner a few weeks later, invested $270,000. A couple of years later, they invested the $3 million. And a few years after that, their company got sold and they took the profits and launched Spacestation Investments. So founder that pitch to an entrepreneur that I interviewed.
And they have the coolest space. So you held an event there and I got to speak there and it was so cool.
It's phenomenal. I remember we did a pitch event there and before the event started, I went down the slide to the stage to begin the event. And it's a phenomenal event. They've got, they've got this really great group of companies. They have this influencer agency, which, has all the top esports and brand influencers that co-invest along with them. And then they actually have one of the most successful esports teams, Spacestation Gaming, who's won all kinds of international competition. So, it's kind of it's like an entrepreneur at Disneyland when you go to his venue.
So I love how he talks about what he does with such passion. And I have a passion in product, as you know, because that's how I started designing products. And I think like he does that, it's a sorely underlooked category. Like investors kind of scoff at it, like it's too risky, which cracks me up because there's actual physical goods. So it's way less risky than some of the software ventures.
Exactly. Everybody, thinks they need, technology, but they all need to eat.
That's right. Exactly. Well, let's hear from Tim Holladay and then we'll catch back up with our thoughts.
Sounds good. Well, hello, everybody. My name is Scott Kelly. I am the founder and CEO of Black Dog Venture Partners and the host of the Emerging Managers Fund and podcast. And I'm happy to introduce a good friend of mine, worked together for many years, and an up-and-coming fund manager, but a seasoned investor, Tim Holladay. Tim, welcome to the show.
Scott, always good to hang out, man. Thank you.
Thank you. Well, before we get started on your fund and where you're going with that, why don't you share a little background, prior to starting the fund?
Yeah, I'm a guy that was a kind of a failed engineer, got a degree from Arizona State University in engineering and never was an engineer. I built and bombed a couple companies on my journey, but built and sold one in 2016. And that's where you and I met. It was kind of, I'm just trying to get this company off the ground. We had a product in market. But just early stage, and we needed some capital. And so I don't recall exactly how we connected, Scott, but I was invited to pitch at one of your pitch events, and it was a 60-second pitch. And I practiced, got up there, threw my pitch out there, and it landed enough that it caught the ear of one specific investor from Silicon Valley, and that started the road for us to raise over $1 million for that. Sold that company in 2016, and I was able to transition from that into some consulting. And then my brother pulled me up here from Arizona to Utah to build out here at what's called the Space Station. So it's you and I have some history, and we've hung quite a bit over the years. And I love kind of being able to understand and have some of that in the gut, intense kind of founder feel from back in those days, but be able to transition that now to investor.
Share a little bit more about Space Station, what you've been doing, since you started that.
Yeah, Space Station's unique in that we're founded by a creator, by an influencer, Sean McBride. He goes by Sean Darris. As he was building out, he was like the top Snapchatter, moved to YouTube and kind of built out a couple channels that are today, incredible view counts, just really successful YouTube channels. He joined with my brother. They were buddies. And decided to build more in the creator economy. So instead of just kind of riding off into the sunset as a YouTuber or building up just more channels, decided to really focus on what could we build inside the creator economy to support. So the first thing was an influencer marketing agency. We work with top brands, top creators, and put those deals together. We also have an esports org. Spacestation Gaming is one of the top orgs for teams like Halo. We took a world championship last year in Halo. Rainbow Six were in the top. Rocket League, Brawl Stars, a number of games. We also have an animation studio internally. But where I get to come into play is we had a friend of ours from back in our startup days, CrowdMike's days, that said, hey, I see what you guys are doing at the space station. You should be investing in early stage companies, like as angel investors. And I'm like, what do you mean, man? He's like, you guys have this unique kind of ability to create and build audience. You have deep connects in the creator economy. You can actually become, strategic investors to these consumer companies. He's like, I can make an introduction to this little company called Magic Spoon. And Magic Spoon, for those that know, is this, high protein, no sugar cereal for adults. So we, in the late 2019, just cut a check off the balance sheet just on a whim, really, it felt like at the time, and put a check into Magic Spoon. COVID hits. Magic Spoon becomes one of the fastest growing direct-to-consumer companies of all time. I mean, just cranking. And so after 12 months of us really trying to help them build, in fact, we accidentally invented the now famous bowl and spoon that Magic Spoon sends to their subscribers. I was just trying to package up a really cool package for influencers, had a laser etched bowl and spoon sent, and Gabby, the founder's like, hey, that's awesome. Can we steal that idea? And they successfully did that. But anyway, long story short, after kind of that first round of Magic Spoon, we just kept rolling. We jumped another round of Magic Spoon, and then we started to syndicate. So we syndicated Magic Spoon, Olipop, Slate Milk, Grasa, all these better for you foods. And then we transitioned into health and wellness with Oura Ring and Hyper Ice. We got into supplements with Momentous, Web3 and crypto in 2021. And now, even just last year, a couple fertility companies, some AI ad tech, an incredible yogurt brand. So all in all, we've now, as an angel group, invested in 109 companies and deployed over $32 million into those companies. So we've definitely been busy the last 4 years here at the space station, building out this kind of strategic angel group. And the last piece here, Scott, is that where consumer companies really get excited is that we bring interesting people into these syndicated rounds, right? So we'll bring top influencers, we'll bring pro athletes and Olympians as investors into our rounds. And of course, consumer companies love that. So that's been our thesis.
That's awesome. So now obviously you've gone from entrepreneur to angel investor, and now you're launching the fund. So talk about the fund, talk about the thesis. Talk about, what you're trying to accomplish with the fund. Yeah,
the fun conversation started early. Like as we were syndicating even these early deals, like, should we just build a fund? But, we felt that we needed to learn, frankly, like we needed to kind of learn the business. We needed to learn what companies needed. And so it took us about 4 years to really get the timing and the conviction to build this fund. We've been working on it for about 9 months. The fund will be very similar in thesis to what we've been doing, which is early stage consumer. So pre-seed, seed stage consumer companies. But we define consumer pretty broadly, Scott, as you know. It's not just CPG, which is great, right? Consumer packaged goods. We try to invest in some of the top CPG brands. But consumer for us is anything that touches the consumer. So that's where you can get into fintech and health tech. That's where we actually can get into even B2B companies that support e-commerce. We call it e-commerce or consumer adjacent. We'll get into those types of companies as well, including some that are using some really incredible AI tools to help support certain functions in e-com. So that'll be the thesis. We're looking to raise a $40 million fund. We are literally just getting ready to circulate it right now. So the timing is incredible. We like as early as next week, I'm not sure when this airs, but we will be here in kind of Q1, starting to circulate this fund.
So you kind of answered some of my other questions. So I'm going to jump into another question.
Yeah.
I want you to talk to two audiences. First, let's talk to an entrepreneur that wants to get an investment from Space Station and your new fund. Yeah. And then then I want you to talk to potential LPs. So let's talk about entrepreneurs first. Yeah. Obviously, you told us about the types of companies in the industries. tell me about the type of entrepreneurs you would invest in.
Yeah, I mean, it's so nuanced. Here's what I've learned, Scott, as I've dove into this world and industry of the last 5 years is it's as much art as it is science, which is probably somewhat maybe disheartening or maybe heartening for entrepreneurs, for founders, because it's quite subjective. I think for us, we have always maintained that at these early stages, it's all about the entrepreneur. Like really, that is the number one kind of thing that we look at is this person the right person to build this product or this company right now? And of course, like the kind of human we want to hang with and, all of that type of kind of personal connections that we feel are important as you're building a team or as you're building out, your investor stack. You want to just have a person that you want to be around. So, that's kind of for us, our number one kind of checkbox is the founder. And honestly, I think that's where it gets hard and subjective, Scott. It's like, I mean, what metrics do you put around that? What metrics do you put around this is a great founder? Partly because sometimes these are first-time founders. We've invested in many first-time founders, and it really can't point to some exited company or anything else in terms of building. You have to just kind of spend some time with them, to try to figure out what they're made of and how they think and how they operate. And that's tough. That's been tough.
Okay, so now let's talk to potential LPs of the fund. So tell me, who is your ideal LP, or what attributes would you want to see in LPs, quite frankly, outside of money?
Yeah. I mean, of course, all money is green, right? To some degree, it's like, cash is cash, and that's a critical piece of this business. I mean, that's what we do, right? Is we're investing capital and trying to help multiply that both for the founders, for the LPs, and for the industry, right? To move the industries forward. And so I think for us, an ideal LP is someone who just gets excited, is excited about exposure to consumer. Like I think that's really the key LP for us, is that they've got exposure to maybe cool tech funds. Maybe they put some capital in, the market and in different ways, public stock. That's all awesome. And we firmly believe you should allocate into all those different kind of pieces and assets. But when it comes to early stage VC, early stage venture, we think that there's a really exciting opportunity specifically in consumer. And I think that from a thesis perspective, our fund is a little bit on the fringes. Consumer at times can be looked at as like, but it's not AI, right? So the multiples aren't there. It's not going to slap a 20x on me. It's the potential isn't there. We beg to differ. We think that we have kind of a contrarian view into consumer that we think is powerful, which I could explain.
So let's obviously the last couple of years have had some challenges on the liquidity side of venture capital. I've been telling entrepreneurs, for years that putting money in is the easy part for investors. Getting money out is the less challenge. So I'll phrase the question: why your fund now? But maybe you can also share where you see, the venture community going in general, maybe specifically for you.
Yeah, I think like why now for us, we have now spent enough time, I think, in market, specifically in consumer, to kind of see how cycles work in consumer specifically, and also we think in venture to some degree. There definitely is. It's cyclical, as most things are, and we have just gone through like all-time low liquidity in general in many markets. So I also spent a little time in the energy market for one of the portcos that I'm on the board, and it's been across the board. So liquidity has been all-time low. I think sentiment also, like investor sentiment, has also been all-time low. Like when people are not feeling bullish, they're not feeling kind of optimistic, that impacts their allocation kind of strategy. For as much as we like to think that investing in anything is just a numbers thing, it's a kind of math. It is as emotional as almost anything you do. There really is emotion involved, at least at this level at what we do. So I think that first of all, our timing now is that it works for us because we think that we now have a a kind of a track record as managers. We've got something that we can kind of point to and say, hey, here are the companies that we're in. Here's what we've already seen in terms of returns or kind of some tracked potential. And here's what we think we can continue to do that. In fact, we think we have better access than we've ever had. So that's one thing in terms of why us now. But also, Scott, I think that I don't know. I'm an optimistic guy, like in general, and so are you, and we know each other well enough to know that. But I really do think that we are moving into just a different and a better cycle from a venture perspective. So I think liquidity is and will go up. M&A is starting to loosen up already. IPOs were frozen the last couple of years. Right. IPO, exactly. All of those, as those kind of from IPO down through M&A, private equity, and then into venture, as those kind of like tiers loosen up, liquidity loosens up, investors feel bullish, and they allocate. And so I think that finding LPs that are excited to allocate now, the timing is better now than it was some time ago. But
I would definitely agree. Obviously,
yeah, what do you think?
We've gone through. You're dealing with the cold in specific, but it's been a little cold in the liquidity side. So
a little cold in Utah.
Share a little bit more about the team. Obviously, you got yourself. Who else on the team is going to be managing this fund and working with the portcos? Yeah,
so I mean, our partners are similar to what we've had right now. Right now, the partners are myself. My brother, who's kind of co-founder of the Space Station, Sean McBride, the influencer co-founder, and then Chris Bennett. He's a prolific angel investor. He's the one that kind of introduced us into Magic Spoon and has incredible deal flow. Those are the four partners. But side by side running the fund with me is Jackson Stewart. Jackson is absolutely just kind of a top-notch utility belt of a guy that really has like deep analytical capabilities, very personable, has a great instinct on founders and on consumers specifically. And we'll run that side by side. Then we have a couple, kind of assistants and others. But honestly, man, like we're a very lean team. As far as like emerging managers go, I'm sure we're not unique, but we'll be just a few of us, maybe three of us kind of full-time day-to-day on this. And we think it's sufficient. We know what we can do and what we have done. And we're ready to kind of basically for us, this fund is just like this new vehicle, this additional vehicle to offer to our network.
So what else do you want to share with the listeners today? Anything in particular, anything we haven't covered yet?
Yeah, I mean, I think that, again, from an LP's perspective, you want to find your own risk profile and find out what you get excited about and allocate accordingly. It's like if you have a little bit higher risk profile, then find some great venture funds, find some, kind of higher risk, higher reward opportunities. And in our case with consumer, here's what we're finding. We're finding that, the amount of capital that goes into consumer on the private side versus the public side has like a 3x offset, which is rare. Almost every other industry, IT, healthcare, other industries, it's kind of roughly 1-for-1. You're putting in X amount of dollars before they go public, and the public market is putting in about the same amount of capital. Consumer is offset by 3x on the public side, meaning 3x capital goes into consumer companies after they go public than before, which we think opens up an opportunity for investors to allocate into consumer now because it will be rewarded disproportionately. And so because of that, Scott, one little fact that we've learned as we've been diving deeper into this world is that contrary to popular belief, I don't know what LPs believe and think. We'll find out here as we push out this fund, but it's like, consumer, you just can't get the returns. You're not going to find companies that'll have a 10x multiple on their revenue. They're not going to be, kind of like these software companies or AI companies. And while, AI is kind of a bit of a bit frothy right now, so let's maybe exclude that slightly. Consumer companies, the top consumer companies are just as likely statistically to trade at a 10x multiple in a liquidity event, so IPO or an M&A, than a software company. Like they are just as likely, but you don't feel that or sense that. And so I think that's one thing we want to kind of get out to the world, just in general, right? For our fund and for any other fund in this world, like consumers is exciting. Something like 70% of GDP is related to consumers. So like, obviously it's insanely robust. and has definitely some staying power. But then also, like, I don't know, we think that the hunting for unicorns method is not necessarily that's not going to be our approach, and we don't know that provides in the whole kind of the best return profile. And we talked about this kind of before we started recording. Kind of some of these big firms are not able to show the multiples that an emerging firm can show. We think that that'll play out in consumer, that instead of hunting for the $5-10 billion exits, that there's a very robust M&A market, specifically with PE, and then also in the consumer space with kind of these 50, 100-year-old companies that innovate by acquisition. We think that there's a $200 million to $800 million kind of exit potential for these companies that is incredibly powerful for the founders, very lucrative for the investors, and is just it's a piece of the ecosystem that doesn't have to be a $2-3 billion exit. Now, we are fortunate to have in our portfolio 4 unicorns that became unicorns during our kind of tenure. So that's awesome. Like, they'll pop up, and we think that we'll continue to find those. But that's not our strategy. Isn't hunting unicorns. It's building just a bunch of, in the baseball analogy, singles, doubles, and some triples.
I was just going to say that you can bat for average, and not strike out as much.
That's it.
And honestly, from an investor standpoint, a lot of investors will invest in a software company not even knowing what the company does or what their product is.
That's right.
And with your fund, they're products that they can feel, touch, eat, drink, whatever the case is, so they can understand the product. And then obviously all you have to do is help them exercise, and work on their business model.
And that's it. And specific, I was going to say specifically, like, you're exactly right, Scott. That's one thing that's fun and sexy about consumer is that, like, you can consume it, you can be a part of it, but also you're right. Like, our specific go-to kind of strategy and unique value, I think, is that we are connected to the creator economy. We know how to help early stage consumer companies grow, working with creators, influencers, and we'll continue to deploy that strategy as a fund. And we think that'll be a help to boost these early stage companies.
Absolutely. Obviously, you are the consummate of smart money when you're working in your vertical.
No, we're trying. I don't know how smart we are, but we're trying. That's debatable, but
we'll find out, I guess.
Yeah, right? We will find out. That's the thing about venture. It's like, you don't know you're a good investor for like a decade, right? And so it's the feedback loop is so slow, but we have some really nice indications that we're on the right track.
So Tim, where can people learn more about Space Station, the fund, and yourself?
Yeah. I mean, obviously, love for anybody to reach out. As we push out this, of course, to accredited investors, we push out this opportunity. We'd love for you to reach out. Just tim@spacestation.com. I mean, email us and hit us up. But also, our portfolio is found at spacestationinvestments.com. And of course, on LinkedIn, Space Station Investments. I'd love to connect with anyone. And if anything, just, it's enjoyable for us on the LP side to just talk through consumer and just help LPs understand, like, is this a thing? There's so much talk about software and AI, which, by the way, we are invested in software and AI as well. We are very pro that market, but not just exclusively. So, and not just enterprise. We think that there's an opportunity in consumer. And if you're an LP and want to, like, just talk it through and see what we see, let's talk that out. And then, of course, if you are a founder and you're building something incredible in the consumer space or thinking to do so, of course, we'd love to chat. Same email, just to best kind of guide to the degree that we can guide some of these really early, like I have a call right after this, a very, very early product development kind of formulation of a new product that could be really interesting with a celebrity. Just to give our 2 cents on what we see, where we see pitfalls, where are the challenges, what are the opportunities. So if you're a founder, give us a ring as well, and we'll see how we can help.
Fantastic. Tim, thanks for being on the show today. And I wish you the very best of luck on the fund, and congratulations on your success today.
Well, and Scott, thank you for all you do, man. Like it is for emerging managers, like this type of exposure, this type of just discussion is so important, because it is challenging for us to find our audience. And so thank you for not just this podcast, but all the things you've done for decades to help guys like us build. So appreciate it.
My pleasure. Thanks a lot, Tim.
Right, thank you.
Thanks for coming. Thanks.
You bet.
I didn't realize that Tim Holladay he called himself an engineer who's not an engineer from ASU. And my dad was an engineer who's not an engineer from ASU. And I didn't realize we had that in common. So, yeah, so it's just so funny that I forgot about that tie-in. He has, 132 million in investments. Yeah. That's like phenomenal in consumer goods.
Yeah, he he's the one. He got started in investing in that cereal company that is now $1 billion. And
$1 billion in cereal. I've tasted it. It's good.
They just took in an investment at $1.8 billion just a week ago, and they're in, I don't know, a $3 or $4 million valuation. So So they've done pretty well. So.
Well, and this is something that I really like. We get, I know that you get this a lot at your events. And of course, because I have such a product background and lots of patents and other things in consumer products, that I get a lot of people reaching out to me too. And that I've always been kind of like, wow, it's really hard. You're going to have to bootstrap this. It's really hard to get investment. But I think they really have a good formula and a good way of looking at the types of consumer product goods that they should have investments on,
right?
That they can make a difference in.
Yeah, and you'll hear about this one when you hear the one I did today with Chris at SoftGay. They don't just invest; they bring in their influencers to co-invest with them, and so you've got these, esports and media influencers that have millions of followers, and I own a stake in this cereal. I'm going to eat the cereal,
Which is way better than just hiring these influencers who will run off to the next thing. Like
exactly.
They're invested in, and I think it's a great strategy and it's really working for them. But, I just think that he's so right that when consumer products are 70% of our GDP, if we don't get a different investment strategy, then how are we going to expect consumer products to stay here in the U.S.? It's just not going to happen.
Yeah. Yeah, a lot of them get developed overseas and they get acquired by U.S. companies, which are, most of them aren't even U.S. companies anymore. They're just on the U.S. stock exchange. So
That's right. Well, and I love that he just also said this quote. He said, he's not hunting for unicorns, but he finds them anyway. I think that's what a great strategy.
Yeah, he's like the Forrest Gump of VCs.
I love that you said that. That's awesome. Tim Holladay is the Forrest Gump of VCs. But, I'm also really glad you asked about the liquidity events, because I do think there is, the liquidity in consumer products is very different, but there is so much brand consolidation that happens behind the scenes that people just don't understand and don't see. But your average, I'm going to call it product inventor, or your, product designer, product creator, doesn't really understand what it takes to prove to them that you're valuable enough to be bought.
Well, that just happened this week. Celsius just bought Alpha Nu for, I think it was $1.3 billion. Yeah. And the reality is they're basically just trying to keep their market share.
Yeah.
And that's really been the model in consumer products, especially food, for years. So.
Yeah. So I think he's really hit on something. I actually really now want to go back to Utah and go hang out in his office for a while, eat some of the fabulous foods that they represent, because they have them all over the place, and ride down the slide again.
Yeah, exactly.
Well, I'm excited that you just mentioned Chris Howard. We've got some great interviews coming up that sort of tie in, and I think you've got such a great breadth of interviews. So I'm super excited for us to continue on and review.
Yeah, it's really becoming interesting, and it's kind of moving to the next thing. Is I sent you the calendar invite. The metamorphosis of this is it's going to become the Emerging Managers Summit.
Awesome. I love that.
And that's what I'm going to be doing at Expert Dojo.
Oh, that's where I got the invite
from. We're going to
from.
start taking it on the road. I go, it's kind of like, hey, you saw these guys on TV, now see them live, kind of situation.
I love that. Okay, so everyone, you heard it here first. We're going to be on the road doing a summit in LA. It's coming up. We'll give you more details as we go forward. So everyone, thanks for listening to us here at Emerging Managers Podcast. We are very excited to bring you next week's emerging manager.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.